At NIIT's offices in Noida, the emphasis is on the rupee and how it may impact technology companies. With global headwinds, the company is also forced to look at more onshore client services and explore new segments for growth by targeting new business areas, factoring rupee volatility, and freezing on new hiring.
Welcome to Surviving the Slowdown, Arvind Thakur. Technology is one sector people expect will actually play its defensive move and do better in a slowdown. Do you think it is managing to buck the trend?
Well, certainly I think every crisis presents an opportunity. And the way the industry is looking at the slowdown is to identify areas of discontinuity where it can provide support.
And what areas are these?
Well, very clearly there are many issues that you have to deal with in a slowdown. So for example, if you look at the banking sector, we are seeing the large banks somewhat challenged. And the opportunity world over.
Yes.
The opportunity is coming from the tier 2 banks or the second level banks, which are first time outsourcers.
But the dependence on the banking, insurance, finance space, is that coming down, or do you think by the nature of those businesses it's unlikely to cut its exposure?
When you have a situation which is like this, where you have significant amount of turmoil, the past is not the prediction of the future. So you have to move away from just sensing and responding to anticipating and creating.
Right.
So one anticipates that there will be other segments which would be as significant as the BFSI segment. For example, the healthcare segment.
Okay.
So the industry would be looking at new areas of growth, and it's already working in that direction. So
when there are new areas of growth, there's obviously, the staple that you have to live with, which in today's case are your basic sectors, whether it's travel and whether it's banking and retail, hospitality and so on. Now for NIIT, are you changing what is the equivalent of the sectoral mix at the firm?
We as a company we're very sharply focused on a few industry segments, and each one of these segments are very significant. That's BFSI, travel, as well as manufacturing and distribution. Some of these segments will continue to grow. For example, the travel space, which is very, very information intensive and dependent on technology. So we'll continue our investments over there.
Okay.
In the BFSI space, we are identifying sub-verticals and sub-segments to invest in. And looking at discontinuities, as I mentioned earlier, identifying new segments of customers to service, which will sustain our growth momentum.
So having said that, there's a rupee factor that's bogging down the entire sector because many have hedged differently from what was expected. How much pain will the rupee cause and how long will it last?
How long will it last? That's $1 million question. From what I can understand, unless there are some significant inflows of dollars into the country, the rupee will continue to weaken. So the recent intervention of RBI also has not helped in stabilizing the position of the rupee. Now, if the rupee weakens, well, it does support the industry because it is very export oriented. But if it is volatile, that's when the problem arises, because then you don't know how to manage that volatility, because the hedge positions that you take assume a certain direction, that the currency would take. So,
in the next few quarters, you think things are likely to remain highly uncertain? Given what, let's say, NASSCOM said, they brought down their 22 to 25% kind of growth story straight and slashed it by half in terms of forecast. Now, that is pretty drastic, isn't it?
Yes, but that happened quite some time ago, and I think that's the new normal which the industry has come to grips with.
Right.
But now it has to look at how will it build on the situation that already exists.
But what will then be the profit centers? Because, while the situation remains uncertain, so does the rupee, and the sectoral mix is changing, what profit centers are companies chasing?
It's, as I mentioned earlier, the past does not predict the future, and you need to anticipate and create. I think what one needs to look at are the kind of issues that the global slowdown is going to create for the industry. One of the issues, for example, is that there is likely to be more protectionism. Right? So you need to anticipate that. And so therefore, you need to create profit centers that address that by identifying on-site low-cost locations so that you address this political issue by creating more jobs in the market that you're addressing, as well as, build your profits.
So in a market that's traditionally been a cost advantage driven by numbers, is that now going to get away from being a market about cost advantage because we are seemingly losing out in technology and in outsourcing in a broad way to many smaller countries? Do you think the nature of technology market in India is changing by itself?
Cost will always be important.
Okay.
So even though there are other global destinations which are emerging that provide that benefit, I think India will be favored because of its cost structures. Having said that, what customers expect is not just cost advantage but business value. And I think this is where the industry will need to look at its service offerings as well as capabilities to be able to help customers deal with the slowdown by not only improving their cost structures but seeing how we can expand their markets for them.
Right. So that is really key, which is to actually build in some amount of innovation to get away from a crisis situation and think ahead. From cloud to cost, all of that will matter. Arvind, thanks very much.
Thank you.